Some of the identifiers for reversal or exhaustion extension that I look for are 1, space between the candles themselves and the EMAs, 2, space between the actual EMAs themselves, 3, invalidation of the corresponding flag pattern and its short EMA, 4, break of the previously established trend, 5, a double bottom green body close for the print of the reversal extension, or a bearish engulfing candle for the exhaustion extension, and ideally a RSI spike to line up with the print of the candle in number 5. So I'm going to try and give some examples over the last couple days on SPY, where if you were looking for the clues, you may have been able to catch one of these extension or reversal candles with no other information other than your patterns and your EMAs. So let me just start by clearing my drawings and go into the 15-minute chart for what I'd be looking for. So if this day had just opened, I would likely be taking a position here at the basin break, which corresponds to the reclaim of the 8 EMA and the overtake of the 20, and then using the 8 EMA as my trailing stop. While in position, I start drawing trend lines off of candles that have already printed to get an idea of what may be coming next. So if this were happening, I would have drawn this trend line. And then as these candles were closing, I wait for peak candles until I start drawing other trend lines. So as we go higher and this candle starts to close, I would already be looking for other indications of a reversal. An exhaustion being possible. So back on my checklist, I would notice that the candles are starting to run from the EMAs themselves, and there's space in between the EMAs, which we could see here. There's plenty of space between the EMAs, and they always want to get back to each other. But because it's part of the phase for an extension to flag and hold the 8 EMA, I would have been drawing my trend line on whatever candle as it's running. And I do these in real time until one of them respects the flag. So then I set my the bottom barrier. I do draw the line, but I pay more attention to the hold of the EMA than the flag. So at this point, with the flag base of the previous candle well above the EMA, I'm still safe in my position. And then the hold of the EMA is my confirmation, which is why this candle was not established as the extension exhaustion. So as it comes up, we're now seeing increased space between the EMAs. And we hit another possible phase moving forward. Now, as these other candles formed, I'd be moving my trend to properly touch the points of the candles that had printed, but I would be establishing basin breaks. So as the candles are forming, I'm either setting basin breaks to the EMAs or flags with the EMA as the trail stop. So if you been scalping and closing your position every time the basin break broke, you could have caught these little pops if you had not entered into this candle at the beginning. it holds the EMA and moves into a basing phase and breaks. We know after the completion of one phase that we're looking for a holding continuation of the intermediate trend or reversal. So now here, as this higher candle forms, I again look to draw my flag using the short EMA as the stop, or as the invalidation of pattern. And shift my trend line to hold the most recent candle prints from when the trend started. So this would be happening as the candles are forming. It's not stagnant, it moves with the price action. So here we see the first break of the pattern and the loss of the EMA, which could be an entry and a scalp. If you wanted to take the full extension exhaustion, that's where your use of other timeframes starts coming into play, is as you suspect that this may be the full extension exhaustion, you're looking back on other timeframes to see if it's also adhering. We see that there's a lot of space between the EMAs themselves on the 15-minute. So we look for a tighter consolidation to give anticipation of the move on smaller timeframes, and we see that they're already starting to come together on the 5-minute. So that same flag that was drawn on the 15-minute has information to be given on the 5-minute, where we see two other indicators of the likelihood that the candle that had just formed on the 15 will end up being the full extension exhaustion candle, and that's the bearish engulfing candle for the extension exhaustion with a corresponding RSI spike. So up here, after the moves of the entire hold of the 8 EMA and 20 EMA on our smaller time frame, because they're closer, we see that the space is forming and a pattern is in jeopardy with an EMA being broken. As we run and place our flags, we're looking then for the spikes in the RSI and the bearish engulfing candle. So our first bearish engulfing candle is given right here at the 12:15, which is actually happening inside of this 15-minute candle. And had you looked for additional confirmation, you could have drawn your flag to the 5-minute to give more information with the failure to reclaim trend as confirmation that you should stay in your position. Going further along, then the 1 minute is on an even further ahead phase, so it's already conducted its EMA crossback after its breakdown. So this too prints a bearish engulfing candle, which would be your earliest possible entry if you were, let's say, beginning a starter. After noticing the RSI bounce, you might take a position on the first bearish engulfing candle with anticipation of it flagging, it completing the bear flag and EMA crossback. Still within your flag of a larger time frame. I know it's kind of hard to explain. It just takes some touch and feel of understanding how the three time frames behave together. If you're drawing your larger trend lines on a bigger time frame, you could see what's happening within. You could see what's happening within those phases on a smaller time frame, and what you're specifically looking for is for the smaller time frames to be in a further along phase than your larger time frame to give you confidence in your entries.